Ladies and gentlemen, welcome to Insurance Town. I'm the Mayor, Heath Shearon, and the host of this podcast. Ladies and gentlemen, I am pumped you're here hanging out with me today because I've got my good friend Van coming to join in with us today, and he's going to be talking about something that I wish I'd have known about back in the day. And so make sure you stick around and check that out. This episode is sponsored by several good friends. Number one, in no particular order, but my good friends over at Smart Choice, the fastest growing agency network, hands down. And I just found out, over 11,000 agencies across the country, 11 billion, probably more than that now in written premium. It's no wonder they're the fastest growing. It's no wonder that agencies want to work with them and partner with them, whether you need a couple of markets, or if you need a whole slew of markets, or you're just starting out, or you've been around a while. Make sure you go check them out. They won't make you bring all your existing carrier partners underneath their umbrella. They just bring you the ones that you need and run alongside you and help you out. They don't have any fees, no startup fees, nothing like that. They help you with higher commissions, lower premium thresholds. I could go on and on. Just go to smartchoiceagents.com and tell them the mayor sent you. Also, my good friends over at Canopy Connect, go to usecanopy.com/Heath and check it out and learn why they are the one-click solution to getting deck pages you need to quote your prospects. And they have intake forms. They have a platform that helps you in so many ways. They are the game changer for your agency if you haven't brought them in for your prospecting and for your intake. And guys, you got to go check it out. Go to usecanopy.com/Heath. Also, my newest sponsor in MAV. You don't need a call center. Just use MAV. They are the AI-powered insurance expert that engages unlimited leads with friendly text to qualify, quote, to connect your prospects with the agents in your office. You hate running a call center, and your leads hate getting those calls. So why not use text messaging? Swap out your entire call center for one capable AI insurance agent ready company that delivers real results. Guys, go to hiremav.com. They help you with 50% lower cost of service, 30% higher lead conversion. You've got to go check it out. Hiremav.com. Tell them the mayor sent you. And guys, I'm going to slide out of the way so you can check out this incredible conversation with my man, Van Carlson. Van Carlson, what's going on, brother?
Not much, Heath. How are you doing, man?
Man, I am good. Long time coming. I think I've been trying to get this scheduled for a little bit now, so I'm glad. How was your holiday, man? I know we just came off a big holiday recently, and so how'd it go?
Oh, it was great. I spent some time with family, like Thanksgiving should always be, right? So, no, it was great. Had a great time. How about yours?
Man, it was good. Man, had a lot of family. We always hosted our house. I enjoy doing the hosting, so. But it's always good to see that last little bit of company walk out the door, man. So get a little bit of a breather and go back to normal life for a minute. But
right.
Good stuff, man. So where you out of, man? What's SRA? Where are you at?
We are out of Eagle, Idaho, a little town outside of Boise. Most people know Boise, Idaho, but
there you go.
We're outside a little town called Eagle, and. But yeah, that's where our company headquarters is at, and we like it here a lot. Idaho is definitely home. So
yeah, I mean, I think of two things. I think of potatoes, and I think of blue football fields when I think of Idaho.
Yeah, that's about right too. It's about right. So it's
awesome.
It's funny how things have changed in Idaho. Though we're more of a seed company now for potatoes than we are growing potatoes now. So
okay.
Yeah, it's been kind of a transition over the last several decades, actually, that we make really good seed in Idaho. And I think Canada and Washington grow more potatoes than us now. But anyway, fun fact in case it ever comes up in down the road for you there, Heath.
I always appreciate a good fun fact. So good stuff, man. Well, Van, do me a favor. Let's take a walk down memory lane and tell me a little bit about you and your storied past. You've got some good roots there in the PNC world, and I've seen your name on some cool lists there and some things going on. So why don't you walk my audience down memory lane? Tell me about where you were, where you came from, and lead me up to where you are now.
Yeah, yeah. In '96, I started my career in property and casualty business. Never set out to do that. I think if you ask any insurance person, they probably, you know, never really thought about becoming an insurance guy, right? And in '96, I started my career. I started with Farmers Insurance. And I lived that life. We became pretty successful. There's another town here called Meridian here in Idaho, and it was growing by leaps and bounds. And this was back in the '90s, early 2000s. I think I grew my agency to about 6,000 clients. Had a great business, and then '08 came along, and the Great Recession hit. And for me, I always loved the fourth quarter. The fourth quarter, because I had a lot of business clients. Like everybody else. I think in the beginning you wear all the hats, and then as you grow your agencies, you start splitting your time and your hats. And one of the things I kept was small business, small to middle market business owners. I loved working with those guys and gals. And when '08 hit, it was kind of an eye opener for me. Meaning that. What I mean by the fourth quarter was, they would meet with their tax planner, if you want to call them that, and they basically would advise them to buy more stuff. And then, of course, that was good for me because then they had to insure it, right? So, everybody's happy. The dealerships are happy, and of course, the owner, he gets to finance the equipment, fully accelerate it, and then he just bet next year was going to be better than this year because he financed it. He took on debt. And literally kicked the can down the road. And of course, when '08 and '09 hit, that became pretty glaring. Covenants of loans started to mean things, and that became, like I think any property and casualty agent, these people become friends of ours. They're great community leaders in your community, and pretty soon they find themselves in dire straits when it comes to financial risk they took. And of course, traditional insurance typically falls down on a lot of those things. That doesn't recognize sometimes the financial risk. And that's really where, kind of leads me up to now, where I'm now a full-on risk manager, not necessarily a property and casualty agent anymore, but definitely deal with business owners on risk profiles that are unique to their industry that maybe a traditional insurance company doesn't do as well as they used to, or maybe never have. And now I'm building these smaller insurance companies that are recognizing self-insuring for businesses and handling their risk overall much more effectively and efficiently, utilizing a little known tax code known as 831B. And so that's really the memory path. A lot of trials and tribulations all in between there, and now we're an 18-year overnight success story, and we're the largest manager of these plans around the country, and it's been a lot of fun.
Before we get into 831 and before we get into some of that kind of stuff, and getting into, the savings business and protecting folks and all that kind of stuff, I need to ask you, what's the craziest, most ridiculous, or totally uninsurable thing that you've seen a business owner stress out about? Have you had some of those like funny, before we get into the serious stuff, like, has there been like a funny or like ridiculous, crazy thing you've seen?
Oh man, I got into insuring horses.
Okay.
Didn't see that. I had this one client. He very well-to-do client, and he got into reining horses.
Okay.
If you know about the reining horses, it's the Yellowstone stuff, right? And some of these studs, some of these horses are worth so much money, and I couldn't believe I found markets for them. And that's some of the fun part of our business too, right? I mean, sometimes you get into these different risks, and you're like, "What do you want to insure?"
Exactly.
But yeah, I really did, and the whole semen thing, and I got more of an education I want to when it comes to horse breeding. But it was definitely interesting. That was probably the most interesting. The premiums were pretty good, so I didn't mind the commissions, but.
Yeah.
But that was kind of out of left field for me. That was when I was doing the traditional insurance. Today, it blows my mind working with business owners that have a unique product. Again, traditional insurance companies do a great job, but the one glove fits all. They try to find these boxes, and everybody's got to fit into a box, right? And Some of these businesses just don't fit into a box very well, but they classify them under this, but really, is the risk really handling it, blah, blah, blah. And so those are always fun things. And we do run into some really unique businesses that just blows my mind. And in the money they make, it's fun to live in a country that you still see the entrepreneurial kind of spirit come out in people. And they took an idea and ran with it and turned it into a profitable entity. And I still say, we've got our problems here in this country, man, but everybody does. But I can tell you what, man, the opportunity here is so vast and so broad that definitely makes you feel good being in our business and trying to manage the risk that they have. But it is always, it's always an interesting, always very interesting from that standpoint, for sure.
Totally. Yeah, let's go back a little bit. If I don't give you too much PTSD, let's go back a minute to that '08 moment that you were talking about. What was that, moment for you? And I guess, that made you realize that a business owner needed something beyond traditional insurance? Well,
I saw it in my own business. I was losing those clients as clients of mine, and I was used to growing. And man, when you're not growing, I'm a growth guy, so you kind of feel like a loser almost. And there's so many things outside you're like, hey man, I'm used to growing double digits. It's not happening. I can't, and I'm losing clients. And it was a kick in the gut, man. I just, that's what, I had financial risk too, right? I mean, that's the reality for me too. But these guys were being auctioned off. I wasn't, at least, but, So yeah, that's really the eye opener to me. I wasn't growing anymore the way I was growing, and man, it didn't. No matter what, it just didn't feel good. It didn't feel good coming to work. It didn't. Losing sucks, and so
yeah. Well,
I feel like and that's just not a good feeling for me. I don't like it at all.
So how did you, because a lot of people listening to this may not know, and we'll get into this here in a minute, what 831B and all that kind of stuff you brought up was. How did you first get introduced to that? Where did you first hear about these 831 government, these kind of plans? Where did that come into your ecosystem, bro?
Yeah, I had a he's my business partner now, but at the time I had a financial planner come to me, Aaron Seaver, and he gave me he said, hey, do you know about this tax code? It gives ability to put away tax deferred money and blah, blah, blah for self-insured risk. And of course, I immediately went to, well, especially back in the 90s, these insurance companies, man, they were highly competitive. I mean, they were buying business, right? I mean, and so all the way through 2000, leading up to 2007 at least, it was highly competitive, meaning that premiums weren't really increasing. The coverages were expanding, but, it was pretty manageable, not compared to today's world, but back then, that was kind of that way. I mean, it was a highly competitive market, and if the insurance company wanted your business, they just lowered the premium. That's kind of the way the game played. So for me, I never thought, well, how would I ever talk a client into being self-insured risk, right? I mean, I was bleeding insurance. I mean, I thought insurance companies did a great job. I saw what we did, the impact we made for clients when there was fires, or God forbid, if there was, I had to deal with death in automobiles and all that stuff that we do. If you've been doing this business long enough, you're going to come into in those types of claim situations. And I saw the impact we made, and in life insurance and all of those things. And I was like, no, man, why would so I didn't believe in it. And so I kind of paused on it altogether. I kind of knew about it in '07, but didn't really see where it played in my agency, honestly. And then, like I said, here comes '08. And then, man, it became glaring. The overall financial risk business owners took, and the risks they've taken, up to the point where you can afford to take advantage of the accelerated depreciation, right? And that's really where, for me, I became more of a believer in this concept of if I'm going to self-insure risk, how do I want to do it? Do I want to use after-tax money, or do I want to use pre-tax money? And that's really what it comes down to, and then just awareness for business owners. And I think from my perspective, being in the insurance business, I was always an educator. I mean, I can't tell you how many times I did reviews with clients and found out, hey, you guys have coverage for that. Or, I never forget one time I had a client get hit by somebody that didn't have insurance, and their daughter was like hurt. And normally the health insurance company kicks in, and I mean, some people become aware of their coverages. And doing a review with this client, I'll never forget that I said, "Hey, you have coverage for that." And it was crazy to me that, but not shocking. I mean, people are busy. They don't, if you want to go to sleep, if you can't sleep, read an insurance policy, right?
Yeah.
But that it became impactful. I mean, it was huge for that family. They had no idea. They were staring down over $100,000 in medical bills. And so again, being impactful to these people, I was like, man, this is. But then when you look in 08, 09 and saw your business owners that they didn't have very many options either, and it just didn't feel great to them. It didn't feel great to me if I'm going to be their real risk manager for these clients. First off, I had one price, one product, which was Farmers Insurance, but also the other thing was, really, am I being a good risk manager for them? If I'm going to hold myself out like that, am I doing everything I can for them and bring really better solutions for a really unsolvable problem? And that's self-insuring risk. I think the biggest, going to COVID, okay, you got 08, then you got COVID. If you've been a business owner over the last 20 years, you got your butt kicked a couple times that were completely coming out of left field at you. And both times they were pretty much uninsured risk. And of course, the government had to step in with the PPP plans and the ERC and all those lovely things. And those were all self-insured risks that happened, right? I mean, the traditional insurance companies couldn't afford to handle indirect business interruptions. So, of course, the government had to step in. And so that's all of those concepts, all of those things that business owners have to go through. I feel much more comfortable. I feel better about what we do now as a profession from SRA standpoint, because I think we're doing a lot. We're rounding out where I think traditional insurance kind of falls down, honestly.
So in the beginning and even leading up to now, I mean, I guess in the beginning I would ask, were you still doing some traditional insurance and then just slowly graduate into that? And now, fast forwarding 25, 30 years, whatever, are you still doing any traditional insurance? Are you strictly, talking your clients into, or not talking them into, but convincing them that SRA is the way to go with self-insured retention? Yeah.
No, I think first off, we do own a subsidiary company called Insure Edge, which is a traditional brokerage, but it's also dealing with this same reality where if I have a client that spends, let's say, north of $500,000 in traditional premiums, meaning work comp, general liability, and all that, we'll start to look at replacing. Well, this gets a lot more complicated, but these are clients that are not risk adverse so much, meaning that they're willing to take on more risk. They just pay a lot more in premiums. That's typically where we can start to look at dealing with the reinsurance markets, and we'll put somebody in the fronting company, and this gets really complicated. Big construction companies we work with will write basically they're self-insuring for the first $500,000 of any losses, and then over above that they have a reinsurance. So it's very similar, like a self-funded healthcare plan for employers. So we work on that aspect of it. Yeah, I still do that. I don't participate in it myself. I deal with the idea of self-insuring your own risk, what that is. One of the things I tell clients is I'm not here to increase or decrease the risk you have. I'm here to position the risk that you cannot traditionally transfer through normal means. Meaning, hey, I'm going to pay a premium. I'm going to get an insurance policy. My fire's covered for my building now. Then there's this risk I'm going to retain on my books, and then we call that an unfunded liability. And how do you want to fund that? And the way we help our clients fund that is utilizing pre-tax dollars versus after-tax dollars. And that's the big difference there.
Yeah. So, it's great. I appreciate you clearing some of that up and talking to me through that, because I know there's agencies listening to this right now that are doing traditional insurance that might be thinking through this or may have heard of it. But maybe those that haven't, how would you explain 831B, to a business owner who'd never heard of him, or to an insurance agent who wanted to get into this? Because there's enough business to go around. But if you could give some advice on that, let's start with the insurance agent that's listening right now, because that's who the audience is. And then maybe we can help them to explain it a little bit more to their business owners.
I think it's the conversations I had with clients. Hey, that's not going to be covered, and here's why. I mean, especially in commercial insurance. I mean, I get calls all the time. I think we all do get calls. I mean, clients at that point in time, they're kind of, grasping at straws with me a little bit. You want to say, but they're just trying to find coverage somewhere because now they have this expense that now it's going to eat into their operating capital, right? That they didn't budget for or whatever. The other thing is, in today's world, co-insurances. You're seeing that all the time now in property. You're seeing ACV, actual cash value minus depreciation, right, on roofs now, on commercial buildings especially, meaning that there's a bigger first dollar lot. I started this in '08. You fast forward to now, man, I'm shocked by some of the things I've seen in the insurance industry. I would have never guessed. I would have seen some of the policies written that have come out that have huge exclusions or huge gaps of coverages on them. It's hard to get replacement on buildings today. I mean, you got a 20-year-old building, good luck getting replacement. And so right. These are all first dollar losses now that have increased substantially, taking on higher deductibles. I am seeing commercial auto liability deductibles for the first time. I shouldn't say for the first time. It's happened about 3 years ago when I started seeing trucking firms that were being forced to take on a higher first dollar loss on their liability portion, not just their physical loss, but their liability portion. These are unfunded liabilities within your business that if they happened, where are you going to pull the money from? Right. And that's a lot of risk, business owners. And I think, especially with traditional property and casualty agents, I think they got to find better solutions for their clients. That's what I was looking for back in '08. Anybody can sell them a BOP policy. Anybody can sell them a rounded out cyber policy, but even our cyber policies are limited because we're limited in the markets that are available to us. We're all kind of selling similar policies, and really they're all backed by some conglomerate at the end of the day. I think from my perspective, I was able to increase my ability for my clients by bringing this tool to them that said, hey, not only can you I'm not here to replace your traditional insurance. I think to do a good job on a thing I call the tangible assets, right? These are assets that you can get loans on. I think traditional insurance does anything you can get a loan on. Traditional insurance companies typically insure them very well. It's the intangible assets of a business, right? And here's the reality. Most business owners, when you ask them, they value the intangible assets of the business more so than the tangible assets, right? Their intellectual property, their branding, right? Their social media status, their intellectual property, their concepts, their contracts. I mean, these are things that they value the most, and this is what they want to sell you. Then when you go to sell a business, this is what they're holding most value on. And I don't think traditional insurance companies do a great job at that. And so. Right. And rightfully so. I get it. I mean, it's, hard to, quantify when was the data loss. I mean, I get all the reasons why insurance companies don't respond to a lot of we call them the emerging risk profile that's happening in our country. The code I'm talking about was passed in 1986 under the Tax Reform Act of '86. And it's the 831B code is when it was introduced. And back then it was crop insurance. So, you got to remember, I mean, back then, and, I was still in high school for the record. I wasn't paying attention to the 86 Tax Reform Act, but the whole point there would be that back then the crop insurance was the issue. Private, profitable companies, which are insurance companies need to be profitable. They're like, hey, this is too risky for us. It's too catastrophic. We're getting out of it. And Congress basically came together and said, we got to create a tax incentive for people to build away pre-tax dollars in order to handle this self-insured risk. And that was the farmers. And then there was a lot of other things going on in the 80s as well. When you go back and we actually have a March of '86 cover of Time magazine has a thing that says, and I think we've bought all the Time magazines that are out there available in that year and month, but basically said, hey, America, welcome, good morning, America, your insurance has been canceled. And back in the 80s, you had a lot of that. You didn't have a lot of tort reform. It spun a lot of tort reform after that. A lot of liability claims were first seen. We had a 250% increase in general liability premiums. I mean, it was just and And
that
we
was
had
the
very
beginnings of
similar.
a big time hard market. One of the first hard markets, in my
Yeah.
lifetime for sure, was right around that 80s, with the tort reforms and all that kind of stuff. And so, yeah, and a lot of carriers had to, some big time challenges there and some lawsuits and all kinds of things. So, yeah, I'm with you on that. And so, fast forwarding to now,
Yeah.
as you said, it started with the farmers and the crops and whatnot. Now, fast forwarding, I'm guessing that 831B and the tax shelters and whatnot is extended to, many different industries.
Well, yeah,
For
absolutely.
every,
Because yeah, well, what's crazy is you take 86 on, right? Nobody worried about brand protection. Nobody worried about social. Cyber wasn't even a thing,
right.
right? I mean, when you look when you multiply the magnitude of the risk profile of businesses, it's gotten substantial. But at the same time, traditional insurance companies really haven't responded to some of it. I look at our cyber policy. I deal with a lot of cyber. Obviously, that's a big risk for a lot of business owners today. And
100%.
when I dive into their cyber policies, if you looked at a cyber policy from 4 years ago today, from let's say Beasley, you see huge differences in exclusions in there. I always tell people your policy is getting bigger by the page, and thank God we start selling. Because back when I started, you do a 3-hole punch, you had to put them in a binder, and he delivered them, right? Now you get to send them with a PDF, which is really nice. I got to say, thank God for the tree. We've saved a lot of trees doing that. But my whole point about that is it's a bigger file today than it was. And if it's a bigger file today, it's only because there's more exclusions in the policy, which means the burden falls back on you as the insured that you're going to be responsible for this now, or at least a portion of it. And I think
that's where you're stepping in, and that's where these agents listening can step in. So one other thing, real quick. That I would love to know. And well, first of all, let me say this. I think there's agents listening right now. And I think there's people that, when you talk about these, self-insured retention, or you talk about self-insuring anything, or you talk about reinsurance, getting involved in that, there's a lot of fear out there. There's a lot of agents who are like, they get paralysis by analysis, so to speak. And like, I don't even know where to start. I don't know where to begin. I don't know if I can transition my traditional insurance agency into that. I don't know what to do with my clients, how to do that. I could go on and on. What would you say to some of those agents right now that are like, I would love to do this, but I don't know how, or I'm a little fearful?
That's our role to play with these. We have a lot of property casualty agents all over the country that work with us now. And we're their expert in the room. I don't expect them to be they shouldn't be experts in this stuff, right? This stuff. I mean, they just need to know a little bit to understand that there's a solution to it. Here's what I tell all of our, we call them strategic partners. We're just another tool in your toolbox. So think of us as another insurance vendor that, hey, I got a unique risk for my client. I can't find the right policy for them. Or, hey, I know that they took in a pretty substantial renewal this year. I can lower their premiums down a little bit by lowering their, raising their deductibles. But more importantly, the client isn't going to turn the claim anyway in because they're worried they're going to lose their insurance next year. And so, this is the market we're in today, right? I hear it all the time from P&C agents. And so, for me, it's just another tool in the toolbox. They don't need to be the expert in the room. I think here's what I will tell you. You will lose clients if you don't bring these types of products up with them because they're looking for other solutions too. And that's, I think.
Yeah, you're right. I think you're right.
And that's all it is. Honestly, Heath, is awareness, get educated. It's not going away. People, the IRS doesn't like this thing. Okay, great. It is so entrenched in big business today, which is the first people to adopt this program. That's why a lot of small business owners still don't know about it. That's why a lot of P&C agents don't know about it. But it's been going on since literally almost 40 years now. And It's not going anywhere. It's very entrenched. The code's been around for a long time, obviously. And companies like us, we have competitors. They're not as good as we are, by no means. But it's going to keep coming. And so to me, either you get on board or you don't. I get the P&C agents, guys. Everybody, P&C agents, you got to love them. It's just, I remember being told that, hey, man, you just get to a certain point with your policies and you get your money and you get residual coming in. There's no better thing than residual income, right? I've learned that a long time ago being in the P&C agency. And it kind of did breed a little bit of complacency, let's be honest, in that environment. However, Like I said, we're not here to take your business. We should be a complement to your business,
A
meaning we should
thousand
be bringing
percent.
more
And I think
value add. Yeah.
what you're talking about is those lifestyle agencies, that they're content to just come in, do their thing, which is nothing wrong with that, and then go to the
Oh,
golf course, play their golf, get involved in the community, go to all the chamber events and go to the parties and hobnob. Nothing wrong with that at all.
no.
But I think you're right in what you're saying. Another thing, following up on that, if you could give me a quick, did you ever watch the show Mythbusters?
Oh, yeah.
I love that show, man. If we could play Mythbusters just for a minute, what are some of the biggest myths or maybe even like misunderstandings about 831B that you might be able to do a little myth busting here for me?
Yeah,
I
I
know
think
it's
the
an old
biggest one.
reference, but I love that show.
Yeah, yeah. I think it's great. It's no different than what I did when I first heard about it. I thought they wanted me to replace their traditional insurance with it, and
Oh,
and I
that's a good one. Yeah,
and honestly, that's not what we're here to do at all.
sure.
Again, we're trying to fill in the gaps where these other policies, the policies, the appointments you have, the insurance companies you're offering, they're all going to have exclusions, and the clients all going to want how to manage those exclusions, right? And so, I think we just fill in those gaps when the opportunity is there for the right client, and I think again, it's bringing a solution to a problem that
Yeah.
you otherwise wouldn't be able to solve, and that's really where I'm at with this. Is honestly, Keith, is just making the P&C agents aware that it's out there, because I didn't know about it. I mean, I thought I was a pretty smart, savvy guy, right? I mean, the 1%er producer, I was president's counsel, all that fun stuff.
Oh yeah. No,
And I didn't know anything
saw all
about
that
it.
about you for sure. So you brought up IRS and you brought up some of that.
Oh yeah.
Like, how does your company, how's SRA stay ahead of the evolving IRS
Yeah.
type situations?
You know,
The expectations?
Yeah, so the IRS is going to be, always the thorn out there that kills deals, because a lot of people are afraid of the IRS for whatever reason. We've gone through their promoter audit. It's called the 6700 promoter audit. It lasted a lovely 2.5 years. They shut it down in June of 24 with no changes to our program. Of course, they said don't read anything into this. They don't like it. It's a tax advantage for the taxpayer, and anytime that happens, the IRS doesn't like them. And to their I get it. It's been abused. It was sold as a state tax play. Like I was saying earlier, really high net worth people would use tools like this to devalue their estate. It was never done for risk management. It was never sold to them as risk management. It was a state tax attorney out there promoting it. And that's kind of and we still deal with that to this day, honestly. But you're going to have bad actors in every industry you're ever going to be in. We know that. Unfortunately, there's bad property casualties out there, right? I mean, so that being said, I still think the IRS knows that these are valid programs, that there is value there. Congress is a big proponent of this program still to this day. I know that because we belong to a lobbyist group. When you get a new Congress going, you got to re-educate the people you got to not re-educate, you got to educate the people who come to office and say, hey, this is a thing. We've been working on that for a number of years. I do think we're getting a ton of traction with Congress right now in this program, because this really should have been the PPP all along, right? And one of the things that we're talking to business owners today were, okay, if you're relying on the government programs back in 2020 during COVID, what are you going to do about the next time? And are you going to really depend on the government to be there, or should you change the outcome of what transpired?
Yeah.
Take advantage of tools like the 831B. I would make the argument our tax code is complicated, no doubt about it, but it also created a lot of wealth. That's one of the things that people don't correlate. It's a risk reward factor the Americans are best if we have enough reward, we will take the risk.
Yeah.
That's what makes us great, honestly, as a country. Around the world, you go to any country, Americans think unique about risk. But if the reward's not great enough, we're not doing it. And I think that's some of the things that's been frustrating for me over the years.
That's a really good point. That's a really good point. And
think about the 1031s, exchanges. Think about the stabilization of our real estate, commercial real estate, because people are able to sell their real estate, buy another piece, take on more risk to do so, but they're avoiding the capital gain taxes, and they can do the 1030. If we don't have that tax code, people don't buy and sell commercial buildings. I mean, just that little, and so
you're right.
Yeah, look at the 401k. We
Yep.
wouldn't, would we be offering 401k as an employer if we couldn't take a deduction on the contributions? No. And
No,
so,
gosh, no. And so, yeah,
yeah,
you're right on there. So I would imagine, uh, as we start to wrap up, I got a couple other questions I want to get into because my wheels are spinning on. I would imagine you got to have some pretty good compliance, when you're
yeah.
running these types of 831B plans and working with commercial clients. Just real quickly, what does a good compliance look like inside of a well-run 831?
No,
I'm
it's
sure
a,
there's other ones out there, but let's go with a well-run 831B
yeah,
plan.
yeah. It's a great. Thanks for the question. I honestly, you need to hire an administrator. Okay, if you're gonna offer 401k, you hire a third party administrator, right? That's what SRA is. We are the 831B administrator. So we want to make sure you stay compliant. There's a 4-part test. There's acting as the principal of the insurance company. What our core competency as a company, honestly, is managing over 800 insurance companies. That's what we do. These are small insurance companies. There's got to be a distribution of risk. There's got to be, there's a ton of compliancy that goes into that. And I think we do it the best of anybody out there, quite honestly, because we've gone through the audit. We were insurance people. We're risk managers. We know what insurance companies, we know what policies cover and don't cover. We're not estate tax attorneys, and we're certainly not CPAs. And so that makes us unique in our space, honestly. And I think from my perspective, it's about compliance and it's about risk management. It's not about taxes aside, great, but this is risk management first and foremost, and it needs to be treated like that. And I think that's where we bring in a good model for us. So I always tell people, if you're
leading with education first in that.
Oh yeah, yeah, absolutely. And the manager should
and
be.
That's
risk
where the
people.
good compliance should begin and end, is what it sounds like.
Yeah, absolutely. Stay in your lane. We don't manage the client's money, for example. When these things go into it, these are C corps. We form, and it's its own separate entity. That money's being managed. The reserves, the surpluses, all of those things are being managed either by the owner, the shareholder of the company, which could be the owner of the operating company, but also it could be their financial planner doing it. We're not going to get into that lane, and that also makes us unique in our space as well, that we are a true administrator of these plans. And I think, there's other competitors out there similar to us that I think that's what you got to be looking for. People that's in the insurance business, not so much estate tax planning.
Right. So last question before we officially wrap up. For the agency owner listening, small or large, how do you know, or how would they know when, let me see how to ask this. When do you know a client is a good candidate for 831B or to bring to you or to transition into this kind of thing or run alongside their traditional insurance plan?
Yeah, it's another great question. So we have a saying at SRA. We embolden business owners through innovation of risk management. And what I mean by that, which is almost when you think about it, it's like, well, that's almost an oxymoron, right? How do you embolden business owners by taking on more risk? And I think that's the mentality of the client you're dealing with, right? First and foremost, it's the mentality of the client. Is he a risk taker? Is he an entrepreneur? Does he get insurance, but at the same time he's frustrated with insurance and he wouldn't turn a claim in and and all these other things, right? We all have those types of clients. That's one thing. The other thing I think you got to ask is, have they achieved to that level? I call it the CPA playbook, right? Have they went out and did the 401k? Have they gone out and bought the buildings? Do they buy equipment to take advantage of accelerated depreciation? And do they have enough flexible income on their balance sheets to be able to afford to put away money on a self-deferred basis to build another war chest or a rainy day fund up on a tax-deferred basis? So I think that's the first and foremost. But the biggest thing is the mentality of the client. If he's still, the keeping up with the Joneses, the buying, spending, and wants the new house, a new boat, and all that, go for it. Go have fun, man. But if you have a client that's more conservative on their approach, they're looking on the sunset of their career of owning this business, and they want to start saying, "Hey, how do I start putting away for some of the risk I've taken? I don't want to keep doubling down every year. I'm getting sick of that. It doesn't make me sleep easier at night." And that's one thing I would say to you too, Heath. Never saw this coming, but one of the greatest compliments we get, and I got too when I first, I first started wearing this. I wore all the hats, no different than I started when I started my traditional P&C agency. But clients would just say, "Man, I just sleep easier at night knowing I've done your program. That I've been able to take away I've saved taxes. That's taxes I saved. I put it into this plan, and now I know it's there for me on those rainy days, or maybe the only bucket money I can turn to. And knowing I've done your program has allowed me to sleep easier at night. And I can tell you, from a risk manager, from a P&C agency standpoint, there's probably no better compliment. One of the things I was going to say was one of the things I hated about being a traditional P&C agent. Man, I love you. Every time I see you, man, you're great. But every time I see you, you cost me more money. Because it was rate increases, right? And so it was never fun, man. I hated that. I hated that perception. I hated that perception of that relationship. And I think by bringing tools like this to the table, you could flip the script a little bit and say, "Hey, I'm saving you money. I'm making you better. I can make you sleep easier at night. You're taking advantage. You're going to have a reward. A rainy day fund. God forbid." One of the things I tell P&C agents to get their head around on our program. This is a health savings account for businesses. And if you understand how safe
looking at it.
It really is, Heath. I mean, that's really I think that's the bridge that allows people to start to think about, okay, how does this apply? How does this work? And the common ground is two things. 401k, take the premium contributions or deductible at the operating company level, and we're their admin. And then on the other side is, how's this help the owner? This is the health savings account for that business that says, "Hey, I'm either going to take on higher deductibles, or it's not going to be covered by my traditional health insurance policy. It's going to come out of my pocket. I get to use tax deferred dollars to do that with," and that helps bridge a lot of that with P&C guys.
No, I like that a lot. That's really awesome. So those who are listening, and they've been listening to us talk about this for a little while now on this podcast. And they want to work with SRA, or they want to reach out to you, they want more information. Just real quickly, tell me the quickest way, the best way for them to get in touch with you to learn more information about SRA.
Really, it's our website, 831b.com.
Oh, wow. You got the website.
Yeah. And so
831b.com.
831b.com. And it's really an educational website to really educate you, become aware. There's great case studies in there. You can reach out to us on that website. Obviously, you're always happy to reach out to me, Van at 831b.com. But I would, we work with trusted advisors and strategic partners all over the country. And we'd like to I love working with P&C agents because, all BS aside, I think it's a great tool for those guys that want to bring a lot of different value to their business, to their clients. And this is just that. It's just another tool in the toolbox for them. And I do think it's a differentiator for them to be able to speak educationally wise with their business owners, saying, "Hey, there's another solution out here, and here it is." And I think it's just, whether they go with you or not, whether they do it or not, it's almost irrelevant. It's the fact that you're leveling your professionalism with your client, and you're the first one to bring this concept to that business owner. I think that's a win no matter what.
No, I think you're exactly right. And I appreciate you sharing that. And ladies and gentlemen, that you're listening to this, make sure you reach out. Make sure you go to 831b.com and check it out and reach out to Van and his team. One other, question I got to ask, because I've been staring at this behind you for a while. That SRA logo, it looks kind of like a race car logo. Are you a race car, a NASCAR guy, or an Indy 500 guy? Are you into that kind of things? It looks like
no, not in the least.
It's a pretty cool logo, bro.
Yeah, well, thanks. It stands for Strategic Risk Alternatives, is what SRA stands for. So, but
that logo has that little. It looks like a little racing stripe on it. It looks.
I've never had anybody say that to me, but I'm looking at it in my screen too, and that's actually I agree with what you're saying. I never saw that before. We may have to. Maybe we'll sponsor a race car someday or something. Who knows?
Dude, that would be awesome. That would be awesome. So. Maybe we'll bring NASCAR insurance down and we'll have our own. I'm just kidding. But anyhow, brother, I appreciate you. Thank you for joining us. Thank you for being here in the program. Thanks for being patient with me as we've been trying to get through all of our other batch recording. We finally got to a place where we can record. I can't wait for the audience to hear this one. Thank you so much. And we'll talk again soon, I'm sure.
Okay. Thank you, Heath.
Yeah, brother.